Welcome to it right here at the JSE. Let's have a look at what was happening on the market since this morning, starting off, of course, with the Asia-Pacific side of things as they roll up. But we'll also, talk about what was going on in the individual parts of the market. But let's have a look at what was going on early this morning. Looking at those markets, we had the Nikkei down about, about 0.1%. It did manage to retrace some of its gains. The Hang Seng Index over in Hong Kong, that was down 0.9%. Of course, this is as the market managed to come back online after being closed since Friday. And over in Shanghai, that market there broadly up. Well, that is how the markets picture played out over in Asia. But over in Europe, we did see some muted activity. And of course, the stock markets over in the US side, the US stock futures, they're struggling to find some ground on that particular side. But the European market looks like that. And over locally, overlooking at the JSE, the biggest news coming out of that front, of course, is Prosus and their decision to offload a 2% stake in Tencent, effectively reducing that stake from 30.9% to 28.9%. And we're joined on the line to talk about what this impact had on the markets a little bit earlier on by our market watcher, who is Makwe Masilela, who is from Makwe Fund Managers. Thank you so much for your time, Makwe, as we discuss what happened on the markets today.
Yeah. Not a pretty picture, especially for the local market. Remember, yesterday we were up nicely because we were playing catch-up, and all because for the right reasons, because markets were reacting to the good economic news that we've seen, coming from the US, from China as well. But yes, today it's more a question of Prosus and Naspers, which happen to be the heavyweights on our market. As you said in our intro, for the fact that they're selling that 2% stake for almost $15 billion US, we saw them going down by almost 4 or 5%. And that led investors to lead the JSE to be down over 1%. But generally, so markets are still waiting for the menace that is coming from the US Fed, mainly because we know now lately we've been worried about inflation. So we just want to see the officials' view, when it comes to the inflation, when it comes to the economic recovery. And we've seen that markets have been managing to reach record highs, all at the back of the markets are expecting the economies to recover going forward because we see the vaccine rollouts continue to be successful and even the good or positive economic data. Look what happened to a PMI here, still above 50. Europe's PMI still above 50 as well. So it just shows you that there are some pockets of growth.
So when the news around the Prosus decision came out, I was looking at the market about an hour ago, and it might have changed a little bit since we've been on air, but the top 40 down 1.2%, Naspers itself down 5.2%, and Prosus locally down 4.2%, and over in Amsterdam down 4.27%. Does the decision to sort of bulk up the war chest open up opportunities in the e-commerce space, specifically in India, for Prosus?
Definitely does. As we said, the guys, their balance sheet will continue to be very decent, and that will help them to be able to go out there and acquire businesses. And anyway, they've been doing that even before, especially when it comes to the e-commerce. And we think they'll continue to do that because they've got a war chest. But like you said, it's all a question of the earnings that they'll now be getting, the dividends that they'll be getting now from Tencent will now be reduced because their stake has now been reduced from 30.9 to 28.9. Hence, you see this kind of market reaction. But long term, this should be good news, especially for the local market, because we don't want our market to be continued to be overweight by the likes of only Prosus and Naspers.
So yesterday we had Chantal Marks from FNB Wealth and Securities, and we talked about PPC because they've made headlines over the past couple of days. But PPC aside, let's look at the construction sector. Are you seeing opportunities, particularly on the JSE, when you look at some of the construction stocks?
It all depends, maybe starting with what we've seen now when it comes to the consumer confidence for March. We've seen it dropping because now that tells you that businesses are concerned about the future direction of the economy, this kind of uncertainty and possible lockdowns. And now we're only pinning our hopes on government to do the right thing, like implement those structural reforms at a very rapid speed, and also to make sure that the investment infrastructure spending that they've been talking about, that this time around we hope they will implement that, then definitely the likes of a PPC or Haven, most of the construction stock or the sector itself, then that will bode well for that particular sector. But it all depends what's going to happen with this infrastructure spend. And we hope, Nastasia, that this time around it will get to be implemented, and then that should be positive for the sector itself. And PPC's story about insider trading, I think that's an outlier. That doesn't have to be part of the sector itself. And we hope they get to sort it out and impose the necessary heavy penalties for those who are involved.
The thoughts that you mentioned around infrastructure spend is a nice segue into my next question. When it comes to the IMF's growth forecast for South Africa, they've revised it. What do you make of that particular decision? They have obviously put in some stringent requirements in order for us to be able to reach their forecast. What do you make of it?
Everybody was revised up, starting with the global economy from 5.5 to over 6%. And yes, with us as well, just 0.3% up. But it all depends on the necessary actions that we are supposed to be taking. Make sure that we roll out that vaccine so that we make sure that we start attracting those kind of tourists. As we know that tourism it contributes a significant portion when it comes to our economy. So it's all also the question of implementing those structural reforms. So should we fail to do all that, then we'll just continue to grow at a very slow pace, because for the fact that we are part of the global economy, the likes of China, when they continue to grow, they'll continue to demand our minerals, and that will help us, a little bit, but it's not going to help us to reach our full potential, and we should be reaching that because we've got this high unemployment. So let's implement what we need to implement so that we benefit from the global economy and also from the local economy itself.
On that note, then, how are you feeling with regards to the current optimism that's filtering through the markets?
It's very positive, truth be told, because we've been worried about inflation. And if this inflation was really real, then we should be seeing stock markets going down. But markets, as they continue to reach record highs, then it starts to stretch valuations. And now that being the case, you ask yourself that markets now will get to a point where they are looking for a new catalyst. Hence, we are waiting to hear what they have to say about the Fed minutes. But should there be no catalyst, then markets won't have much of a choice but to take away profits. But hopefully with the earnings starting season, when it comes to the US, probably that will help or give the markets direction. But at some point, people will start taking profits if we don't get any new catalyst to try to help the markets going up. And yes, the global economy, as it's growing now, it gives a sense of hope that it is justified to see stocks at this kind of levels. But we need to see those earnings reflecting the reality of the economy.
All right, Makwe, let's leave it there. Thank you so much for your time this afternoon. That is Makwe Masilela talking to us about his thoughts on the JSE's market performance. Of course, we'll be keeping an eye on what is happening with the process decision and how it's impacting the market for the rest of the day. That's it from me. We'll be back tomorrow right here.